Good afternoon and welcome to this edition of Closing Bell. You're watching Moneycontrol live broadcast. Well, a quick take on the market. So indices falling for the second time in 3 sessions today, and overall the mood has turned a bit cautious, although the Sensex and Nifty did manage to trim the losses towards the close of session. However, the intensity of the fall earlier seen on Monday and then on Tuesday, I beg your pardon, and again today has made market players a bit shaky. But interestingly, small caps still seem to be holding fort. Key small cap indices on the Nifty, both of them closed slightly higher. Mid caps also fared slightly better than the frontline indices today. Among the prominent losers in the Nifty today was Tech Mahindra, the third quarter numbers falling short of market expectation, and the stock falling by close to about 6%. And among the prominent gainers today, you had Bajaj Auto, which was up by about 5%. Coal India and Adani Ports were the other big gainers in the Nifty, rising by a little over 2%. In sectoral trends, IT and healthcare shares took a beating today. Bank shares were also under pressure. However, realty shares managed to make a comeback. They had been under pressure for the last couple of trading sessions. And in the mid-cap segment, among the prominent losers of the day, we had Balkrishna Industries, HPCL, which just reported its numbers a short while ago, and Alembic Pharma. All these stocks losing close to about 4%. Whereas among the prominent gainers of the day, you had PTC India, Ambuja Cements, and India Bulls Housing Finance, all of them rising by close to about 5 to 7%. Among the stocks in focus, we had Laurus Lab. The stock was down by about 6%. Third quarter numbers fell short of expectations, and at the earnings con call, the management was not able to give a clear guidance. In fact, at the time of the second quarter as well, the management has said that this possibly could be the bottoming out of the cycle, but numbers haven't improved much in the third quarter as well, and that's leading to a lot of disappointment on the street. ACC shares were up sharply today, rising close to about 10%. Third quarter numbers were pretty strong there. Net profit rising by about 378%, or almost fivefold year on year. However, the revenue growth was fairly tepid, just about 7% growth in revenues. IGL was the other prominent loser. The stock down by close to about 6%. Again, third quarter numbers a bit disappointing. Sequentially, the net profit fell by about 28%, whereas revenues were up by just about 3%. And now we move over to Amabareesh Baliga, independent market expert, to get a feel of what's happening on the market right now. Amabareesh, thank you for joining us on Closing Bell. So, Amabareesh, what are you picking up? So, the market again falling for the second time in 3 sessions, and you're seeing a slightly bearish trend play out over the last month. Last month also market managed to recover from the lows, but since then it seems to be trending lower. So, what are you picking up?
No, see, we have seen extremely good momentum in the past couple of months. I mean, especially the last 3 months, we have seen extremely good momentum. And the mid cap and the small caps have become just a bit too expensive. And if you look at the duds of the last 3 to 4 years, I mean, all of them have become multi-baggers. I mean, when you talk about railways, defense, no one is even looking at those sectors, 2 to 3 years back. And you see each of the stocks in these sectors have become multi-baggers. I think all the positives are discounted to a very large extent, and there's absolutely no room for any negative news. And now you look, last couple of days, we have seen the PSUs really going crazy. I mean, even something like a MTNL, which is not into business now. I mean, I don't know how many people really use MTNL, in today's terms. Other than the real estate, I don't know what is there in MTNL. But again, this is the stock which has moved up. When stocks like these move up, it's decently clear that the markets really don't have anything else to look at. So anything and everything goes up. Anything where there's momentum continues to move up. But at some point of time, it has to stop. And I think we are close to that, because this time the earnings, by and large, have fallen below expectations. And because of which, I think the markets now have turned to like a sell on rally market than a buy on dips market.
So, Ambrish, interesting that you mentioned about third quarter earnings. So, when you say that they're falling short of market expectation, is it in absolute terms, or would you say that it is relative to the kind of valuations that these stocks are quoting at, which means that even if the numbers are decent, the market then tends to get disappointed?
Absolutely. I think it is relative because when the markets have gone up like this, I mean, you need to see the corporates doing much, much better than what was expected earlier for you to even justify buying further from these levels. So that is where I think, I mean, the corporates are falling short. I mean, you really can't expect, I mean, just because the market has gone up 100%, you don't expect the corporate, which was possibly showing a 15% sort of a growth, suddenly starts showing 25, 30% growth. I don't think that's possible.
Ambrish, this fall has been steepest in the banking sector now. HDFC Bank's numbers were disappointing, but you did see some decent numbers from some of the other banks, notably ICICI Bank. So, what
Right.
is market worried about at this point in time?
See, I think the market clearly is worried on the NIMs, I mean, which was anyway expected to start coming down. And we have seen that happening across most of the BFSI space. I think more than that, it's the issue now today of garnering fixed deposits, I mean, which is the cheapest funding for them, savings and fixed deposit. I think this is the cheapest way of funding. I think that is where most of the banks are falling short because a normal retail investor, I mean, which is a huge chunk, I mean, they are today preferring to invest in the markets because, I mean, who's bothered about that 6, 7, 8% which you get? Even as a senior citizen, the maximum you get is about 7.75, 8%, when the market is giving you 5 to 10% return in no time. So people have, I mean, shifted a lot to market. I mean, if you're looking at the SIP, is about 2 lakh crores per annum. I mean, this money which would have otherwise lying with the banks has moved to the markets. I think this is hurting them to a certain extent.
And when you look at the IT sector, the month started off on a fairly strong footing. You had good numbers from TCS,
Right.
Infosys, and even Wipro. But after that, it seems to be a bit of a mixed bag. Tata Elxsi numbers fell short of market expectations, and now we have Tech Mahindra also, which has taken a beating after its third quarter showing. Uh, what is your outlook on the sector now that you're talking in terms of rate cuts in the US? Does that
Right.
change the overall picture for the IT industry?
See, in fact, I mean, the IT sector, we are not really expecting a great performance in this quarter. But then when the first two or three numbers came, it was a very decent positive surprise. And because of which, I mean, we saw those stocks doing extremely well. Along with them, they pulled up the whole IT sector as such. But I still believe that, I mean, there would be this a bit of a slowdown, which we have seen even earlier. I think that should continue at least for a quarter or two more. In fact, I mean, I would see a decent up move in the IT space, possibly from the June, like 24 quarter. I think before that, we will still see some sort of a cut in earnings even in the next quarter. So at this point of time, I would be a bit cautious in the IT space overall. And the stocks which have moved up, I think it was a good opportunity, at least a trading opportunity to book out and possibly wait to buy at lower levels.
Well, cement has been the surprise performer of the day. Big jump in ACC's third quarter numbers. Now, the big concern here about cement stocks in general was that the pressure on margin because of higher input costs. Now, that fears seem to have abated somewhat. But if you look at the other trigger, which was cement prices, they have also not been moving up as sharply as they have in the preceding months. So, what is your reading of the cement sector?
No, see, I mean, what we have seen in the last 3 years, as far as cement is concerned, is that the volumes are going up, but the margins were under pressure because one, the input costs had gone up, and at the same time, you're not seeing too much of a rise in cement prices. But that has changed to a decent extent in the last 2 quarters. We have seen that the input costs have, in fact, come down to a certain extent. At the same time, we have seen, I mean, the cement prices rising, but not really in a big way. They've started rising. I think that will continue going ahead in the next couple of quarters. Volumes anyway will move up because of the sort of infra spend and the real estate construction which we are seeing. I think the cement volumes will increase. Along with that, your margins are going to improve with the prices going up. So overall, if you're talking of the next foreseeable future, next 1 to 2 years, clearly I'm quite bullish on cement and would utilize any of the dips to buy into them.
Amabareesh, what are your thoughts on the realty sector now? The sales momentum, particularly pre-sales, are pretty strong.
Yeah.
At the same time, you've seen some huge sell-off in in realty stocks earlier this week. Seems to have been some bit of recovery over the last couple of sessions. So, how do you see the near-term trend in the sector?
Like real estate, we have seen most of the stocks doing extremely well in the recent past. So it's quite natural that once you've seen that sort of a move, there'll be some correction. But then we should remember that whenever people make money in the markets, I mean, we have seen that in history. The first thing they do is they upgrade themselves. In fact, they buy like new cars, they buy white goods, travel, and at the same time, they also upgrade themselves with a new house. And in fact, if you look at 2023, I think investors have made much more money than they would have ever dreamt of. So part of this money is clearly flowing into the real estate. And if you look at industry in general, most of the CXOs and the senior employees, I think the wealth has gone up decently well in the last 3 to 4 years. But along with that, if you see the real estate prices haven't really shot up. It's only in sub buckets we have seen gains. And I mean, even there it's slowly improving. So, I mean, right now in real estate, it's real demand and it is not speculation like what we have seen earlier. So, people are using it for, I mean, they're buying it for their own use. So, I think this is going to continue looking at the way people have made money in the market, at least for the next foreseeable 12 to 18 months, we'll still see the demand in real estate. So, I would say that any sort of a correction should be utilized to buy into real estate, hold on for the next 12 to 18 months.
And Amabareesh, what would your advice be for the retail investor? How should he position his portfolio ahead of the elections?
I mean, see, whatever said and done, whatever the expectations are there in the market, despite that, elections means some amount of uncertainty, which will mean volatility. And the way the markets have gone up, I think we'll see some correction before the elections. So it is time to clearly book out, at least to a certain extent. I mean, you really can't book out the full portfolio. It's not even advisable. But at least be on cash. I mean, like I've been suggesting a cash level of at least about 25% as of now, and especially the mid cap and the small caps, where you've seen multi-baggers book partially and at least make the rest of the stocks free.
Well, thanks for those insights and the time, Amabareesh. And with that, it's a wrap on this edition of Closing Bell. Thank you for watching. We'll be back with you again on Monday morning at 9 a.m.